Welcome to TalkTickers, your essential briefing for cutting through the noise of earnings calls. Today, we're diving into CoStar Group.
Yeah, they just dropped their Q2 2025 results, and given the state of the real estate market, there's a lot to unpack here.
Absolutely. It's a shifting landscape, but CoStar seems to be making some pretty bold moves.
They really are. And this report gives us a detailed look, I think, at a major player in real estate tech and online marketplaces. We get some compelling insights into how they're performing and, maybe more importantly, their strategy going forward.
Right. Our mission today is to get past just the surface level numbers. We want to pull out the key takeaways from the call, give you a solid grasp of CoStar's financial health, how each part of their business is doing, and what management's signaling for the future.
Basically, understand the why behind the what.
Exactly. Okay, let's kick things off with those headline numbers for Q2 2025. CoStar reported revenue of $781 million.
Yeah.
Pretty robust.
Yeah, that's a strong 15% increase compared to last year. And what's really kind of amazing is this is their 57th consecutive quarter of double-digit revenue growth.
57. That's almost 15 years. Incredible consistency.
It really is. And then on the profitability side, adjusted EBITDA, which, gives you a cleaner look at core operating profit, It jumped significantly.
How significant?
To $85 million. That's up 108% from Q2 last year.
Wow, 108%.
Yeah. And importantly, both that revenue figure and the adjusted EBITDA, they came in higher than expected, beat consensus estimates, and even the top end of their own guidance. That points to really strong execution.
Okay, so they're hitting on both revenue and profit, but what really caught my eye was net new bookings. A record $93 million this quarter.
That number is striking. It's a 65% jump just from Q1.
65% sequentially.
Yeah.
And up 38% compared to last year. What does that tell us? Is this just a rebound or a real acceleration?
Well, I think it shows clear momentum across the board. It's not just about making sales. It's about locking in future revenue, getting those long-term contracts signed. In this kind of market, that visibility is crucial.
Right. It suggests the sales engine is really firing.
It definitely is. And digging a bit deeper, beyond those headlines, if you look at their core commercial real estate info and marketplace businesses, sort of the bedrock, they delivered a really outstanding profit margin.
Okay.
43% in Q2. Now, that's excluding the big investment areas like Homes.com, On the Market, and the new Matterport acquisition.
So 43% margin on the established stuff? That's incredibly healthy.
It shows the underlying strength, yeah.
And speaking of health, their balance sheet looks solid. Ended the quarter with what, $3.7 billion in cash?
$3.7 million. And they're putting some of it to work returning value to shareholders. Bought back about $45 million worth of shares in Q2.
Okay, $64 million year to date then.
Yeah.
That signals confidence. But how does that square with, needing cash for acquisitions or that big sales force expansion they're doing?
That's always the balancing act, right? Capital allocation. But they also highlighted their customer retention. Contract renewal rate was 89% overall.
Pretty good.
But get this, for customers who've been with them 5 years or more, it jumps to 95%.
95%. That's incredibly sticky.
Exactly. It shows the value proposition holds up long term. And that stable base lets them make those aggressive growth bets, like hiring more salespeople or making acquisitions. They can sort of do both.
Okay, that makes sense. So with that foundation, they're feeling bullish. They raised their full year guidance for 2025.
They did. Revenue guidance is now $3.135 billion to $3.155 billion. That implies about 15% growth for the whole year.
15% annual growth.
And they bumped up the adjusted EBITDA guidance to between $370 million and $390 million for the year. Strong signals.
Definitely. All right, let's dive into the segments. Apartments.com, still a powerhouse.
Oh, absolutely. Continues to perform really well. Revenue up 11% year over year. Hit $292 million in Q2. That's getting close to a $1.2 billion annual run rate.
$1.2 billion run rate. Wow.
And net new bookings were $45 million. That's up 20% from last year. And actually their fourth best quarter ever for bookings in that segment.
And they're adding a lot of new properties, right?
Yeah.
I saw something like 7,600 new communities just in the first half of this year.
Yeah, 7,600, which, like you said, is more than they added in all of 2024.
And they managed this without heavy discounting, which is impressive given the competition. How do they pull that off?
I think it comes down to the value they deliver. Their net promoter score, the NPS, is 94%.
94. That's exceptionally high, almost unheard of.
It really is. It means customers are extremely loyal, willing to recommend them. Plus, they have a 99% monthly renewal rate. Property managers clearly see the benefit.
Okay.
And even though overall traffic to rental sites was down industry-wide, the Apartments.com network actually performed the best. Their visits were only down about 11%, while some competitors saw drops as steep as 39%.
So they're resilient even in a tougher macro environment.
Exactly. Shows a real competitive advantage.
And their brand awareness is way ahead too, right? Something like 68% unaided awareness among renters.
68%, which they say is significantly higher than all their main competitors combined. And they claim they deliver more leads and almost twice as many leases as the next two competitors.
So they're not just a place to list, they're a core business driver for these properties.
That's the key. And the Matterport integration is a big part of that now.
The 3D tours.
Yeah. Listings with those Matterport tours are getting 23 times more leads.
23 times.
And people are spending 71% more time looking at those listing pages. It's a huge engagement driver. Plus, they're planning to roll out AI-powered voice search later this year. Always innovating.
Okay, so Apartments.com is strong, but the real, maybe the real drama is happening over at Homes.com, their residential play. How's it going?
Well, it's definitely heating up. They had solidly positive sales growth in Q2, which is good news after some earlier churn when they launched the Mid-Get model. Residential net new bookings were $12 million annualized for the quarter.
Okay, $12 million.
Yeah.
And revenue.
Revenue grew 8% year over year, and they added 6,300 net new agent members. That's a 56% jump in membership just in Q2.
56% membership growth in one quarter? That's rapid expansion.
It is. But what's maybe even more startling is the brand awareness. Unaided awareness jumped from just 4% when they launched the big campaign in 2024.
Well, I remember the Super Bowl ad.
To over 36% in Q2.
4% to 36%. That's a massive leap in brand recognition.
Huge breakthrough. And they attracted an average of 111 million unique monthly visitors across the Homes.com network in Q2. Significant traffic.
Okay, people know who they are now. But what about the agents using the platform? Are they happy?
That seems to be improving dramatically. Their net promoter score among agents jumped from just 9 in Q1.
Oof, 9 is not great.
No, but it leaped to 38 in Q2.
By 9 to 38 in one quarter, that's a 340% increase.
Exactly. Shows rapidly improving satisfaction. And they're highlighting that member agents are getting 62% more listings than non-members, and those listings get 22 times the reach. So tangible results for the agents.
That makes sense. And they have this Boost product too.
Right, Boost. It's like a trial offer, basically. Lets agents or sellers promote a single listing with some membership perks without committing to the full subscription.
Smart way to get people hooked.
Seems to be working. Nearly 25% of those Boost users have converted to full memberships, so it's a strong sales pipeline.
Okay. Now, they were pretty direct about going after Zillow on the call, right? Mentioning antitrust concerns and Zillow's policies.
Oh yeah, very direct. They allege Zillow is using market power, forcing agents to post listings within 24 hours or risk getting banned. CoStar is positioning Homes.com as the agent-friendly alternative.
They're even offering free boosts for listings banned by Zillow, I saw.
That's right. It's an aggressive stance. They're betting heavily that agents are feeling squeezed and looking for an alternative.
What are the risks there, taking on the incumbents so directly?
Well, Zillow is obviously a huge, established player. There's risk of retaliation, maybe legal battles. But CoStar seems convinced this agent-friendly message is the way to win share. They're backing it up, too.
How so?
They're massively expanding the Homes.com sales team, planning to have around 750 reps by the end of this year. That's up from 230 at the end of 24.
Wow, tripling the sales force.
Big investment. And they're launching a new section focused on new construction homes in August, already signed up 200 builders, targeting another key area.
Okay, Homes.com is clearly a major focus. What about the original CoStar product, the commercial data side?
Still the bedrock, and it's actually accelerating. Generated $271 million in Q2 revenue, growth sped up to 7% year over year.
7% growth on that large base is solid.
And net new bookings were the best they've seen since Q3 2023. Strong demand from banks, institutional investors, property owners, the core clients.
And LoopNet, the commercial property marketplace.
LoopNet had an absolutely stellar first half. Generated more net new business in the first 6 months of 2025 than in all of 2024.
The whole year.
The whole year. Net new bookings surged 345% compared to the first half of last year. Revenue growth picked up to 8%.
What's driving that huge surge?
Seems like their strategy of selling broader packages and using asset-based pricing is really paying off. Plus, they're expanding internationally. Launched in Spain, France is coming in Q4.
So the international side is growing too.
Very much so. International businesses overall have hit record net new lookings for 4 straight quarters, up 90% year over year in Q2.
90% growth internationally.
Yeah. And on the market, their UK residential portal saw listings grow 20% to over 800,000. Good traction there.
And they're making a big international acquisition too, right? In Australia.
That's right. They're finalizing the deal to buy Domain Holdings, one of the 2 big portals down under. Should close in Q3.
And the timing seems interesting with the main competitor, REA Group, facing an antitrust probe.
Yeah, very interesting timing. Australia's regulators looking into REA after reports of huge price hikes, up to 78% apparently.
Yeah.
CoStar might be walking into an opportunity there.
Shows some sharp strategic thinking.
It certainly seems that way, not just buying scale, but maybe buying into a market ripe for a new competitive dynamic. Okay, and tying a lot of this together is Matterport, the acquisition they made.
They really emphasize their belief in Matterport, the whole digital twin concept, creating those detailed 3D models of spaces. They see it accelerating growth and driving profit across their platforms.
So how are they integrating it? It wasn't hugely profitable on its own, was it?
No, it wasn't. The plan is to transform it. Leverage CoStar's massive sales force, thousands of reps compared to Matterport's small team, and really push it as a B2B solution.
Shift from maybe some consumer focus to strictly business.
Pretty much. And they shared a key stat.
Yeah.
Customers using the high-end Matterport Pro 3 camera have an 85% renewal rate for the software subscription.
85%.
Compare that to only 40% for people using just their mobile phones to capture spaces.
Big difference.
Huge. So CoStar plans to invest in better cameras, make the pro-level gear more accessible, focus on that high-value B2B usage, quality over just quantity.
And they're cutting costs too, shutting down that photography service, VHT.
Right. VHT came with Matterport, did about $14 million in revenue, but lost over $10 million a year. Didn't really fit strategically. So they're winding it down. It'll hit the other revenue line by about $10 million this year, but it shows discipline, focusing on the core, profitable parts of the Matterport tech.
Makes sense. Okay, stepping back, what about the broader market context? Commercial real estate, especially office, is still tough, right?
Definitely facing headwinds. High vacancy rates in office persist. But management sounded cautiously optimistic that a sharp drop in new construction deliveries should help stabilize things soon.
So less new supply coming online might put a floor into the market eventually.
That's the hope. And what's interesting, despite the negativity, actual transaction volumes were up seasonally in Q2, increased 43% year over year across the main property types.
43% increase in deals.
Yeah, and office transaction volume specifically spiked 71%.
71% jump in office deals, even with high vacancy. What does that mean?
It suggests that, well, properties are changing hands, maybe at lower prices, but there's activity, there's price discovery happening. It's not totally frozen.
Liquidity isn't zero.
Right. And CoStar is betting on capturing more of that activity. That huge increase in their sales force, over 400 new reps just this year, up to 1,800 total, shows their confidence of grabbing share, regardless of the exact market conditions.
They're playing offense, not defense.
Seems like it. And that whole agent-friendly strategy with Homes.com is a key part of that. Trying to differentiate, provide more value, and win over agents from competitors.
It's a clear strategic choice.
Absolutely. You put that together with the international expansion, the acquisitions like Domain and Matterport, the investment in AI. It paints a picture of a company trying to digitize global real estate on a massive scale.
Building a comprehensive platform for the future, essentially.
That looks like the goal.
All right, this is TalkTickers, and now it's time for our This Is Not Financial Advice segment. We take the earnings call narrative and spin out a, let's say, outrageous but plausible trade idea.
Okay. Based on everything we've heard today, especially the competitive stuff and CoStar's big bets, here's a thought for someone with maybe a higher risk tolerance.
Lay it on us. My trade idea. Go long CoStar Group, CSGP. Really leaning into the Homes.com momentum and the Matterport turnaround story, while at the same time maybe exploring a short position in a competitor like Zillow, Z, a pairs trade, essentially.
Okay, let's break that down. On the long CoStar side, you've got that Homes.com NPS jump 9 to 38 and a quarter. That's not just fluff. It suggests real improvement in agent sentiment translating into business, like that Boost program converting nearly 25% of users to full subs. It feels like they're building a powerful, agent-focused alternative.
Right, against a competitor that according to CoStar at least, is facing some backlash from agents and potential legal issues.
Exactly. Then add Matterport. Yes, it's losing money now, but CoStar is clearly reshaping it, leveraging their sales force, focusing B2B, where renewal rates are double 85% for Pro 3 users versus 40% for mobile. Making the high-end cameras more accessible could unlock serious value.
And shutting down the VHT photography business shows they're serious about getting Matterport profitable and strategically aligned. Disciplined integration.
Precisely. Now, for the potential short side on a competitor like Zillow, the call itself provided the allegations of coercive tactics, the lawsuit, the potential antitrust scrutiny, if agents start migrating away due to these pressures.
And their rental traffic declines were worse than CoStar's too, you mentioned.
Right. That combination, alienating your core agent base, potentially facing regulatory headwinds, maybe losing ground in key traffic segments, creates a narrative for potential underperformance relative to CoStar.
So the thesis is basically betting on CoStar's aggressive agent-centric strategy and disciplined execution, especially with Matterport, to gain significant ground against an incumbent that might be stumbling or facing self-inflicted wounds.
It's definitely bold. It relies on CoStar executing flawlessly on multiple fronts, Homes.com scaling, Matterport turning around, international growth continuing. But the call laid out a pretty compelling argument for why that divergence could happen.
A lot of moving parts, but certainly food for thought.
Definitely. So wrapping up, CoStar delivered a very strong Q2, robust revenue, record bookings, and pretty significant progress in those key growth areas like apartments.com and especially homes.com.
Yeah, and that big push on the sales force, the international moves, integrating Matterport, it all points to a company aggressively positioning itself for the future of real estate tech globally.
We hope this deep dive gave you some useful insights into CoStar's Q2 call and their strategy. But as always, remember, this is just our take. Do your own research, talk to a financial professional before making any investment decisions.
Absolutely. We hope this helps you understand what's driving CoStar forward. Let us know what earnings call you'd like us to tackle next time. Thanks for tuning in to TalkTickers.